This is the wrap-up for Tuesday, February 2nd. We're back with the show. We had quite a bit of movement in markets. In general, we had a weaker dollar across the board, benefiting the pound and CAD more than any other currencies. Oil resuming its slump. A bit of news from the political scene in the United States, with Trump being a loser and the party in the Democratic Democratic Party is tied between Sanders and Clinton. Zika virus is grabbing the headlines as well. But let's talk markets. Eurozone inflation is a slight beat. All the options are open for the ECB in March. US GDP is mixed, a slight miss, but internals were a bit better than expected. Canadian GDP, as expected, Canadian dollar moves a lot more with oil, but showing some resilience, showing some strength despite the recent fall in oil prices. China is still a mystery with mixed PMIs. UK was better than expected. It supports the rally in the pound. Okay. Manufacturing PMI in the United States was very worrying because of employment. The employment figure sort of shows that there's contraction in the employment in the manufacturing sector. Okay, the RBA made its decision, no change and no real impact on the Australian dollar. The Australian economy looks good, but China is worrying. That's sort of the bottom line. Okay, let's look at a few charts. Euro dollar hugging 109, 109.15 at the moment, 107.80 and 109.50 are levels to watch, but we're in an even narrower range over there for quite some time, actually from mid-December, early December. The pound is on the move, currently sliding to support at 143.65, resistance 144.80, support 142.40, 142.30. Okay, we have the construction PMI from the UK to move the pound today. Should be interesting. The yen sliding from a dollar yen sliding from the highs, 120.60. We've already been at higher ground after the Bank of Japan surprise with setting negative interest rates. So, but still keeping a safe distance from 120, 121.50 is resistance. Dollar CAD very close to 140, 140.33, rising together with the slump in oil prices. So dollar CAD is off the lows because oil prices began falling, but it could have been worse for the Canadian dollar. 141.50 is resistance, 139.10 is support. Australian dollar after the RBA 70.65, 70.50 is some kind of support, 71.50 is resistance. Okay, we'll probably hear more analysis about the RBA later today. Kiwi dollar 65. Oh, now it's beginning to slide. Waiting for it's a big day for the New Zealand dollar because we have milk prices and also the employment report. It's a quarterly report from New Zealand, so it should be a big market mover for the Kiwi. Okay, 64.15 is support, 65.80 is resistance. Okay, let's talk about the events for today, even though we mentioned quite a few of them. Just after the show, German employment data expected to show an improvement in the German economy. Construction PMI in the UK, usually a market mover, even though tomorrow is we have an even bigger market mover for the UK, the services one. Eurozone unemployment rate at 10 GMT. Let's see if it provides us with another positive surprise with the fall. Then we have only second-tier US figures, so the focus moves to New Zealand, sorry, with the milk auction later, employment data, and a few figures relevant for Australia at night. Okay, so that's the wrap up for today. I see a few